Hello everybody and welcome to today's video, which is an effective trading model that works for beginners. So this is the two-step model. I have been creating a series of videos around this model, primarily on gold. I think very interesting. So I do this commentary mainly on a daily basis around gold. Now, in today's video, I'm going to use Euro USD. I don't trade Forex. But I want to show something that is very interesting. You see, in all the videos, there are specific nuggets of information that I assume and therefore provide them in specific videos. So they're not necessarily part of the steps of the model. So what is the model? What is the fundamental basis of the model? The model itself just requires 5 steps. So you need a range. So think of this as your A to B leg. And I call this a directional range. So this is typically a very strong move, creates a swing high, creates a swing low. This could be up or could be down. Now this move is not always the fastest, but it's always going to be the longest. The next thing you need is your range 2, and this is your retracement or corrective leg. And what you want is for that price to retrace to at least the 50% or the 70. The 70 is your maximum. That is, there can't be any candle closes beyond the 70% fit because this is dependent on the time frame you are looking at. The rest of the steps is just really trade management. You want to wait for your reversal. This is using a lower time frame. So for example, on gold, I use the 20-hour time frame, and then on the lower time frame, I use the 1 hour or the 4 hour. I wait for reversal there. I check for SMT. So you will have SMT that creates the two-step, and then an SMT that triggers the two-step. Usually two, but if there's one, that's fine. Now this doesn't always show up, but this is where your experience comes in. You want to make sure that this is triggering where you have a fair value gap, and then you just target 100% of the range, right? The first range, which is the A to B leg. And I'll show you all this. If you don't see it in this video, you can watch the other videos on gold. I will link to the entire series. It's just a daily commentary, so it runs you through this process. So first, the model is a 50-50 model. I just want to make this clear. It's 50-50. If you use this incorrectly, you will just get a lot of failures. Okay, so I want to show you an example how you use this incorrectly and then show you how you should use it correctly. So let's use this Euro USD example. I'm just going to run this back here. All right. Okay, we're going to look, let's make this bigger. So I'm just going to add on the right hand side, this is pound USD. So the first thing about using the two-step model. Now this is assumed, I just assume everyone does this. So I never really talk about it, is when you are looking at any specific security, you always want to look at a corresponding correlating security. So for gold, I always look at silver. For uh, for the Nasdaq, I always look at the S&P or ES, right? For Euro USD, you would look at pound USD, for example. You always want to have this either side by side or different screens, and you want to make sure that they are moving together. If something's off, just ignore it. So what do we have here, this leg right here? This is your leg 1, your A to B leg. That's what you'll see. So again, I'm going to assume right now that for this video, I want you to just ignore the higher time frame, the trend, ignore all of that. Let's just isolate this specific move. Let's just assume You're just looking at this specific move. This is the 15 minutes. So we have this leg, which is your range one, right? That's what you'll assume it is. It's the first step. Range one, A to B, right? You're going to label it range one. And some people might even say, well, look, there's a break of structure and all that kind of stuff here, right? I don't use any of that. I just stick with the model. But let's just, again, this is how people use it incorrectly. So you have your A to B leg, right? Again, it's usually a strong leg, longest leg. You can see it's quite straight, lots of fair value gaps. Good. Swing high, swing low. Then you get a retracement, okay? And we want this to go to where? The 50 or the 70. So if I run my fib, we've got the 50 and the 70. Now I'm going to run this back a little bit here. Okay, so price runs, hits the 50. You're excited. Now at point C, this is where we start to hunt for trades. This is where we hunt for trades. But here's the problem. Look at pound dollar cable. Euro has made what looks like a retracement into the 50%, so you're excited. Why are you excited? Well, it's gone into a fair value gap right here, right? It's overlapping with the 50, okay? But there's no SMT. It's no SMT. However, at the top here, what do you have? You have higher high, SMT, okay? What does Euro do? Is this the 50-minute? Actually, no, there's no SMT here, actually. I thought there was just an SMT there. So there's no SMT there, so we can ignore that one for now. There was an SMT. But you're excited anyway. So the first problem that I can see here is there is no SMT. So that reduces your confidence. I'm not going to take that. The second problem is pound dollar is not, you can see that it's weird. It's doing its own thing. This has not retraced. This is still going down. So again, I wouldn't be taking this euro trade. It makes no sense in the context. Yes, we've hit the 50%. So we've done range one, and technically we've done range two on the 15-minute. But I wouldn't be taking it here. And then you see how this candle closes down. So let's go here. Let's go to euro, and let's go to the 1 minute. So you would be looking for a retracement on the 1 minute because that's the lower time frame, right? So what do we have here? It's the same thing, right? This is your leg one, and this move is your retracement, your leg two. Where does that go? Can I make this bigger? Okay, where does that go? If we run this on a fib as well, okay, just make it a smaller fib. Where does that stop? 70%. So right now you're excited. You're like, well, right, step one, step two should be done, right? Again, no. We have no SMT and we don't have a corresponding action or correlating action on a different pair. So you're taking on too much risk at this point. It makes no sense. Yes, we've reversed technically. Okay, so we wait for the reversal, which we look for on the lower time frame. We have a fair value gap. I think even on the 1 minute we have a fair value gap. Yeah, we have a small, I believe a small fair value gap right there. But again, no SMT. So I wouldn't take this trade. Let's see what happens. So you're excited, boom. Price starts to reverse, reverse. If you had your stop loss above there, it's taking you out now. Right? So it's taking you out if you had your stop loss below there. Now I always say you want to have your stop loss right here at point A, only if you took the trade at a 70%. If you take the trade below that, you usually have it roughly around the highest candle of that fib. So you're out, right? So you're thinking I'm going to try again at the 70%. So you wait. What does price do? You go up a little bit. Okay, that's a strong close. Let's see. There you go. That has invalidated the entire two-step. You cannot, on the higher time frame you're looking at, have a close above. You can have a wick. You cannot have, let's go back. Let's go here and let's go back to the pound and this on the 15 minute. Okay, the pound is just retracing. It's, they're doing two different things. This is already closed above the 70. So that invalidates this trade. This trade does not work at all. So let's quickly see what happens. So this is not the two-step. This is assuming this is the two-step that fails, and then you say, well, didn't quite work. No, you've just implemented it incorrectly. You need to always watch your corresponding pair. You need to look out for fair value gaps, SMT overlaps. So let's run this again. Let's run this further down. It takes you out completely. Okay, so that's not the two-step. Now let's see where the two-step actually works. So watch the right-hand side. These two are doing exactly the same thing right now. Okay, so let's run this. Okay, what do we have here? This right here. Okay, we have another. What's that? This is a range. Nice move. Swing high, swing low. So it's not one or two candles. You have a series of candles. This is the 15-minute, by the way. I don't trade on the 15-minute, but this is what we have. Corresponding pair is doing the same thing. Let's run fib. Where are we at? 50%. Okay, let's delete that. What do we have? Pretty much here. Fair value gap. Okay. We don't have SMT here, but we do have SMT here. All right, now this is making more sense. So we've got SMT there that triggers this. So now it's interesting. Now I'm more confident. Look at pound SMT. So we've got SMT, right? We've got SMT. We've got fair value gap. Okay. We just need to wait for that reversal. So here we have 50. So we are looking for, or we are hunting for trades 50 to 70. Okay, we can use that entire range to hunt for trades. We also are looking for an SMT here. We don't have one yet. I would wait, but I'm hunting for trades. So let's go on a little bit. Pound is going down. So I expect, there you go. What do you see here now? See another SMT. Okay. Now I would be taking this trade on the pound, not the euro, because I'm expecting an SMT to form. And the one that forms the higher SMT is I'm waiting for one of them to make the higher SMT. So if a euro is going down, my expectation is this makes a lower SMT based on this SMT. This made a higher SMT, so I expect the next SMT to be lower. Again, this is something I just assume, right, that you have seen happen. I've seen this happen over and over again. So I just assume that's what's going to happen. It's not part of the two steps. And now we have the SMT. We can go to lower time frame, wait for the reversal, and then what we do is just target 100%. So that's it. Let's run this. Boom. Oh, is that 100%? Yeah, you're done. That's it. That's the two-step. So to summarize, you wait for the first range, you wait for the second range, which is you'll go to the 50 or the 70. Do not put your stop loss too close. You want to put your stop loss at point A, especially if it goes to the 70. When it gets to the 50, it's a bit more flexible where you put your stop loss. But you always have to anticipate price going towards the 70, especially when the SMT hasn't formed. You simply wait for the reversal on the lower time frame. So if you're watching the 15-minute, your lower time frame might be the 1 minute or the 5 minutes. You check for the SMT. So you're looking for SMT at the point of the two-step. Make sure there's a fair value gap there, and then just target 100%. That's the basic targeting. But you can target point B, for example, which will be this level here. You'll target this point B level here. Okay, so this is A, this is B, this is C. Point B is your low hanging fruit. So there you have it. This is your effective trading model that I believe works for beginners. If you like the model or just like the idea of the model, please like and subscribe, and I'll see you in the next video.